Hey everyone, welcome back to Corporate Dakota. MML Clinton Limited Term Municipal Fund just filed its N-CSR report. And I see a few interesting shifts in their holdings that you need to know about. Quick note. This is not financial advice, just my take on public filings for educational purposes. We are seeing more money flow into a few specific states for their municipal bond holding, and a noticeable increase in their repurchase agreements. A strategy I want to unpack. So ML Clinton Limited Term Municipal Fund, formerly known as MassMutual Clinton. Limited Term Municipal Fund has put out its semi-annual shareholder report, and it gives us a snapshot of where things stand as of the 31st of March 2026. First off, let's talk about costs. These are always important for investors, and the filing breaks down what a hypothetical $10,000 investment would have cost over the last 6 months for Class I shares. It was about $15, which is a pretty low number. Looking at the key statistics as of the 31st of March 2026, the fund had total net assets of $61.5 million, which is a decent size for this type of fund. The portfolio held 46 positions, and the portfolio turnover rate was 35%. This means they are not actively trading in and out of positions too quickly, which can be good for managing costs. Now let's dive into what the fund actually invested in the bulk. 97.4% of it was in municipal obligations. That is where the money is. And where are these municipal obligations located? Texas takes the lead here at 16.3%, followed by Pennsylvania at 11% and Georgia at 9.7%. It shows a clear focus on certain geographic regions for their investments. Next up, we have the MML Clinton Municipal Fund, another part of the MassMutual family. This filing is for their semi-annual shareholder report as well, and offers insights for the same period, the 1st of October 2025 to the 31st of March 2026. For this fund, the costs are slightly higher Class I shares for the MML Clinton. Municipal fund would have cost $21 for that hypothetical $10,000 investment over 6 months. Key stats here show total net assets at $63.3 million, slightly higher than the limited term municipal fund. The portfolio holds 43 positions and the turnover rate is 15%. This is considerably lower than the limited term fund, suggesting a more static investment approach. Interestingly, this fund is 100% invested in municipal obligations. There are no other significant categories like repurchase agreements that we saw in the other fund. Texas is again the top state for holdings at 29%. This is a significant chunk of the portfolio. New York comes in second at 13.9%, followed by Illinois at 11.3%. This concentration in a few states is definitely something to keep an eye on. Then we have the MML Clinton Municipal Credit Opportunities Fund, also providing its semi-annual report for the same period. Scroll what, where the fund costs for the last 6 months. So the user wants me to act as a scriptwriter for a YouTube channel called Corporate Decoder. I need to transform the provided SEC filing into an engaging, conversational, and easy to understand video script. Here is a breakdown of the core requirements. 1. Voice and personality. Engaging, conversational, simple English 12th. Grade reading level. Explain complex terms with simpler words. Focus on what it means and consequences. Avoid boring details. Natural flow, avoid robotic. This is this, that is that structure. No markdown, lists, parentheses, speaker labels, headers, no punctuation, special characters like or, unfold contractions, didn't, did not. Dates default to month year unless full date is critical. Tickers and initials like sex need dots, e.g. Apple 2. Format strict opening sequence, 1 brand queue, max 6 words. Hey everyone, welcome back to Corporate Decoder. 2. Ticker event Triangle e.g. Today Fubo just filed a 1 for 40 reverse split, and I am seeing one red flag that matters. 3. Disclaimer, quick note, this is not financial advice, just my take on public filings for educational purposes, no generic filler in the opening. Continuous narrative, natural transitions. 3. Financial table analysis, focus on most important numbers, translate percentages to real-world impact. Identify discrepancies, connect performance to strategy competition, compare current vs. previous periods for trends. Warren Buffett style analysis, scroll to tables by picking unique specific cell values. 4. Content, focus on the filings point, financials, risks, strategy, find the story, include external context, company background, competitors, trends. Distill technical data into engaging insights. Avoid trivial details, contact info, addresses, legal formalities. If financial tables exist, mention 2 to 3 key numbers and interpret them. 5. Structure and depth, 7 to 10 minute script, approx 2,000 to 3,500 words. Logical sections mirroring filing structure. Include all key details, financials, risks, strategies, leadership, legal. 6. Scroll tags. Between 30 to 100 characters, text must be exact from the filing. Scroll before talking about the content unique cell values for tables. Avoid common text-to-talk. 7. Historical comparables and numeric anchors for high-impact events, reverse split, going concern, etc. Cite historical comparables, Kodak, Sears, Bed Bath & Beyond with numeric anchors, person drop timeframe, dollar impact on $1K. If no clean comparable, use a concrete number from the filing. 8. Opinion and analysis seamlessly integrated at the end. Assess company direction, strengths, weaknesses, risks, opportunities. Clear conclusion, verdict, shaped sentence. Crucially, include a specific natural sounding sentence pointing to description for tools used only if video 3 mins. Signature sign off. That is my take. Stay decoded. Single call. 2. Action sentence, like, comment, subscribe, Discord. 9. Miscellaneous. Respond only with the script or skip. For TTS, write naturally, use commissary periods. Avoid complex punctuation. Unfold ticker's initials with dots, e.g. Apple. Filing scan and strategy. The filing is a Form N CSR, specifically a semi-annual shareholder report for multiple funds managed by MassMutual Advantage funds. It contains detailed financial statements, portfolio holdings, and expense information for several distinct fund classes, e.g. Class I. YAC. The story is about the financial performance, costs, and investment strategy of these mutual funds. Since it is a shareholder report, the focus will be on explaining these numbers in a way regular investors can understand, highlighting differences between share classes and the underlying holdings. Key sections to focus on: costs, understanding the expense ratios and what investors pay, key fund statistics, net assets, holdings count, turnover, portfolio investments, characteristics, what are they invested in. Top states countries, this is where the story of the investment strategy lies, financial statements and highlights. Net assets, income, expenses, gains and losses, net asset value per S-hair. This is crucial for understanding performance. Notes to financial statements, crucial for understanding nuances like fair valuation, derivatives, risks and tax implications. Approach for script 1. Opening. Standard greeting, identify the filing, N-CSR, and the company MassMutual Advantage funds, while hinting at the focus on financials and strategy. 2. Fund overview, briefly mention the different funds covered, e.g. limited term municipal credit opportunities, Barings global floating rate, unconstrained income. 3. Costs, explain the hypothetical $10,000 investment. Cost for different classes, highlighting class differences. 4. Investment strategy, detail the portfolio characteristics. For municipal funds, focus on state concentrations. For Barings funds, focus on debt types, bank loans, corporate debt, and country exposure. Explain what these mean. 5. Financial performance, statements of assets, liabilities, operations, changes. This needs careful simplification. Focus on net assets, investment income, expense ratios, and net realized, unrealized gains and losses. Translate percentages into understandable impacts. 6. Risks, I notes. Skim through the notes to find key risks, e.g. fair valuation, derivatives, bank loans, credit risk, restricted securities, defaults. Explain what these mean for investors. 7. Comparables. Look for any significant performance shifts or cost anomalies that might warrant a comparison, given it is a semi-annual report for March 2026. Direct comparables might be limited within the document itself, but I can frame the analysis in terms of trends. 8. Analysis conclusion, summarize the findings for each fund type. Assess their direction, highlight key risks, and offer a verdict. 9. Tools C-sign off. Add the standard closing sentences, constraint checklist and confidence score. 1. Engaging conversational style. Yes. 2. Simple English 12th grade. Yes. 3. Explain complex topics simply. Yes. 4. Interesting. Avoid boring details. Yes. 5. Avoid this is this structure. Yes. 6. Opening sequence brand, ticker event, angle, disclaimer hook. Yes. 7. No filler in opening. Yes. 8. Natural transitions. Yes. 9. No markdown lists. Parentheses, headers to speaker labels. Yes. 10. Simple punctuation. Yes. 11. Unfold contractions. Yes. 12. Dates default to month year. Yes. 13. Tickers initials with dots. Yes. 14. Avoid robot writing. Yes. 15. Financial table focus. Yes. 16. Translate percentages serial. World impact. Yes. 17. Identify discrepancies. Yes. 18. Connect performance to strategy. Yes. 19. Compare periods, yes 20. Buffet style analysis, yes 21. Scroll tags, yes 22. Unique scroll text, yes 23. Scroll before talking, yes 24. No scroll mentions, yes 25. 7 to 10 minute script length. Aiming for this 2,000 to 3,500 words, 26. Logical sections, yes 27. All key details, yes 28. Avoid trivial details, yes 29. Include 2 to 3 key numbers from tables, yes 30. External context will integrate general fund knowledge, 31. Distill technical data, yes 32. Comparable C-numeric anchors, if applicable, yes. We'll focus on interpreting numbers within filing, 33. Seamless analysis conclusion, yes 34. Assessment of direction, yes 35. Notable risks, opportunities, yes 36. Verdict-shaped sentence, yes 37. Tools sentence, yes. For longer scripts, 38. Sign off, yes 39. Call to action, yes 40. Skip for empty filing. NAA filing has content confidence score. 5/5 mental sandbox opening, need to make sure the ticker is clear. The filing covers multiple funds, so I'll focus on the company name MassMutual Advantage Funds and the filing type N CSR report, and hint at checking out the investment strategies and costs for different fund classes. Simplifying terms. Municipal obligations means bonds issued by cities and states to fund public projects. Repurchase agreement is like a short-term loan where a security is sold with a promise to buy it back later. Level 3 investments means using unobservable inputs, so more management judgment is involved. Financials for the statements of operations, I'll focus on net investment income and net realized unrealized gains losses to explain overall profitability or loss for the period. For net assets, I'll highlight significant changes or growth. Scroll tags, I'll pick longer, more specific phrasing from the tables, like holding descriptions or specific expense categories. Analysis for municipal funds, the state concentration is a key point. For Barings funds, the heavy reliance on bank loans and corporate debt and their associated risks, credit, liquidity will be a focus. I'll look for any expense waiver details that impact the final cost for investors. If costs are high compared to peers, I'll mention that strategizing complete. I will now generate the script following these steps. Hey everyone, welcome back to Corporate Dakota. MassMutual Advantage Funds just filed its N-CSR report, and I'm seeing some interesting details about their investment strategies and costs for their shareholders. Quick note, this is not financial advice, just my take on public filings for educational purposes. We are going to decode the financial health and investment choices of several of their funds, from municipal bonds to global floating rate debt, to understand what matters most for investors. Let's start with the MML Clinton Limited Term Municipal Fund. Its semi-annual shareholder report from the 31st of March 2026 shows us where the money is and what investors are paying. First, the cost for a hypothetical $10,000 investment over 6 months class. iShares would have cost just $15 the filing. Also mentions this is annualized, so that gives you a ballpark idea of ongoing expenses. Key stats show total net assets at $61.5 million. The portfolio holds 46 holdings, and the turnover rate is 35%. This means they are not constantly buying and selling, which can be a good thing for managing transaction costs. When we look at what the fund invests in, 97.4% is in municipal obligations. This is a classic strategy for funds seeking tax-exempt income. And where are those municipal obligations? Geographically, Texas is the largest at 16.3%, followed by Pennsylvania at 11% and Georgia at 9.7%. These are the key states the fund is leaning on for its investments. Next up is the MML Clinton Municipal Fund. Also reporting for the same period, the costs here are a bit higher. A hypothetical $10,000 investment for class iShares would cost $21. This fund has total net assets of $63.3 million. It holds 43 positions, and importantly, its portfolio turnover rate is much lower at just 15%. This suggests a more buy and hold strategy compared to the limited term fund. This fund is 100% in municipal obligations, confirming its focus on that specific income stream. Texas dominates the holdings at 29%, New York is next at 13.9%, and Illinois is third at 11.3%. This concentration is significant and might mean bigger swings if those states face economic issues. Then we have the MML Clinton Municipal Credit Opportunities. Fund class iShares here cost $27 for that $10,000 hypothetical investment. Total net assets are $56.3 million with 43 holdings. The turnover rate is 19%, showing they are not extremely active traders. Like the other municipal funds, this one is also 100% invested in municipal obligations. New York is the largest exposure at 24.3%, Illinois is second at 16.2%, and Texas is third at 9.4%. This fund seems to favor certain states more heavily than the other municipal funds. Now let's shift gears to the MML Barings Global Floating Rate Fund. This fund deals with different types of debt and its costs are a bit higher class. iShares would cost $37 for that hypothetical $10,000 investment. This fund is larger with total net assets of $109.1 million. It holds a lot more positions, 301, which is typical for a more diversified global strategy. The portfolio turnover is 21%. Here we see 86.8% in bank loans. This means they are lending money directly to companies, often to support mergers or acquisitions. Corporate debt makes up another 6.7%. And they also use Repurchase Agreements, a short-term financing tool. The largest country exposure is the United States at 62.8%. The United Kingdom is next at 9.9%. And Luxembourg follows at 4.9%. This indicates a heavy tilt towards developed markets. We also see Class Y shares for the Barings Global Floating Rate Fund with the same cost of $37 for that hypothetical investment, and class of shares costing $50. This shows how different share classes, even within the same fund, can have different expense structures. For class of shares, the cost is $50, and for Class C shares, it jumps up to $87 over 6 months, clearly illustrating the impact of higher distribution and service fees on those classes. Finally, we have the MML Barings Unconstrained Income. This fund also focuses on credit instruments. Class I shares would cost $42 for that $10,000 hypothetical investment. This is the largest fund with total net assets of $140.9 million. It holds 544 positions, much more diversified than the municipal funds. The portfolio turnover rate is 38%. The investment mix here is different. 47.6% is in corporate debt, showing a significant allocation to company bonds. Bank loans are also a substantial part at 29.6%. These are generally higher yielding, but also carry more risk. The United States is the largest exposure at 46.5%, followed by the United Kingdom at 7.8% and Ireland at 4.8%. This fund also has broader global diversification than the municipal funds. For the MML Barings Unconstrained Income Fund, Class Y shares cost $45 and Class A shares cost $58. This highlights the cost difference for investors. Class C shares would have cost $97, demonstrating the highest expense for that share class. Looking at the financial statements, we can see these funds are substantial. MML Clinton Limited Term Municipal Fund has net assets of $61.5 million. The Municipal Fund has $63.3 million. The Municipal Credit Opportunities Fund has $56.3 million. The Barings Global Floating Rate Fund has $109.1 million. And the Barings Unconstrained Income Fund is the largest with $140.9 million. The number of holdings varies, indicating different diversification levels. The municipal funds hold around 43 to 46 positions, while the Barings funds hold many more, suggesting a more complex or broader investment universe, especially the Unconstrained Income Fund with 544 holdings. The portfolio turnover rates tell us about their trading frequency. The municipal funds are relatively stable at 15 to 35%. The Barings funds show higher turnover rates from 21% up to 38% for the Unconstrained Income Fund. This means they are adjusting the portfolio more often, likely in response to market conditions in the credit space. Now let's get into the actual investments, starting with the MML Clinton Limited Term Municipal Fund as of the 31st of March 2026. The portfolio shows a substantial amount in municipal obligations. Total principal amount is $61,804,185. This primarily consists of bonds and notes. We see investments in states like Alabama with a Southeast Energy Authority revenue bond worth over $2 million, Arizona with a Maricopa County Industrial Development Authority revenue bond over $1 million, in Florida with Capital Trust Authority revenue bonds and State of Florida General Obligation Bond, DS, summing up to over $4 million. Georgia represents a significant portion of holdings, 10%. Here we have Dalton-Whitfield County Joint Development Authority revenue bonds and Main Street Energy Inc. revenue bonds, totaling over $6 million. Illinois holdings are close to 10%, with City of Chicago General Obligation and Waterworks revenue bonds, along with State of Illinois General Obligation bonds making up nearly $6 million. Indiana shows holdings of over $4 million, including Franklin Community School Corp, general obligation bonds, and Indiana Finance Authority revenue bonds. Ohio has a general obligation bond for over $2.4 million Pennsylvania. Holdings are significant at 11.3%, totaling $6.9 million. This includes Commonwealth of Pennsylvania general obligation bonds and Pennsylvania Turnpike Commission revenue bonds. Texas leads the pack in this fund with over $10.3 million in municipal obligations. This includes Canutillo Independent School District General Obligation, bonds, and Central Texas Turnpike System revenue bonds. This concentration in Texas is quite striking. The total municipal obligations are valued at over $61.8 million with a cost of $62.1 million, and short-term investments add another $1.6 million, bringing the total investments to over $63.4 million. This fund is heavily invested in municipal debt. Moving to the MML Clinton Municipal Fund again as of the 31st of March 2026. This fund also holds 98.9% in municipal obligations with a principal amount valued at over $62.6 million. In Alabama, we see holdings in County of Jefferson Sewer revenue bonds and Southeast Energy Authority revenue bonds, totaling over $4.5 million. Florida holdings are also around 7.2%, including North Sumter County Utility Dependent District revenue bonds and Palm Beach County Health Facilities Authority revenue bonds, totaling over $4.5 million. Illinois makes up 11.1% of the portfolio with Chicago-O'Hare International Airport revenue bonds and City of Chicago General Obligation bonds, adding up to over $7 million. Indiana holdings are around 3.6% with Concord Community Schools, Building Corp revenue bonds, and Indiana Finance Authority revenue bonds. Texas is the largest state exposure for this fund at 28.7%, with holdings exceeding $18.1 million. This includes Bexar County Hospital District General Obligation and Central Texas Turnpike System revenue bonds, among others. The total municipal obligations here are valued at over $62.6 million, with a cost of $63.4 million. This fund is almost entirely invested in municipal debt as well. Let's look at the MML Clinton Municipal Credit Opportunities. Fund the portfolio is 98.7% in municipal obligations valued at over $55.5 million. Alabama holdings are 6.2%, including County of Jefferson Sewer revenue bonds and Southeast Energy Authority revenue bonds. Colorado shows 5.4% exposure with Colorado Educational and Cultural Facilities Authority revenue bonds and Colorado Health Facilities Authority revenue bonds, totaling over $3 million. Florida holdings are 8.4% with Florida Development Finance Corp revenue bonds and Greater Orlando Aviation Authority revenue bonds. Illinois is a significant holding at 16% with Chicago Board of Education, General Obligation, and Chicago O'Hare International Airport revenue bonds, contributing to nearly $9 million. New York is the largest state exposure for this fund at 24%, with holdings well over $13.5 million. This includes Build NYC Resource Corp revenue bonds and City of New York General Obligation bonds. The total municipal obligations here are valued at over $55.5 million, with a cost of $56.5 million. This fund is also heavily concentrated in municipal debt. Now we move to the MML Barings Global Floating Rate Fund as of the 31st of March 2026. The portfolio is quite different here. We see equities making up 1.3%, and the real story is in bonds and notes, which is 92.7%. Under equities, we have common stock worth over $1.4 million. There are holdings in companies like Learfield Communications and HRN Bidco, as the biggest part of this fund, 86%, is in bank loans. These are essentially loans made directly to companies, often part of syndicated deals for things like mergers and acquisitions. We see loans to companies like Clear Channel Outdoor Holdings and Neptune Bidco US. Within bank loans, there are sectors like aerospace and defense, with holdings in Barnes Group and Transding Inc. There are also bank loans to companies in the bank sector, like Ascensus Group Holdings. Commercial services is another large area with significant holdings in companies like Ensemble RCM LLC and Flutter Financing BV, which is a large position and shows their investment in the media and entertainment sector through this exposure. The total bank loans are valued at over $93.8 million with a cost of over $112 million. This indicates they are holding these loans with some unrealized appreciation. Corporate debt makes up 6.7% of the portfolio, including bonds from companies like Summer BC Holdco, BSAL, and Tekkenverwaltungsgesellschaft. The total corporate debt is valued at over $7.2 million, with a cost of over $8.2 million. Overall investments for this fund are valued at over $108 million, with a cost of over $116 million. Finally, let's look at the MML Barings Unconstrained Income Fund as of the 31st of March 2026. This fund is the most diversified, with common stock at 0.2% bonds, and notes are 87.9%, and bank loans make up 30.5%. The common stock holdings are very small and include companies like Psy Group Inc. and HRN Bidco, as bank loans are a significant portion at 30.5%. This involves lending to companies across various sectors with exposures in Canada, Denmark, and France, showing a global approach. France has a notable presence in bank loans with investment in companies like Altus Franca and Atos C. Germany also features prominently with investments in Bayer, AdG, and Ceramtec Aquico GmbH. Luxembourg holds a 1.7% allocation in bank loans with companies like CCP Luxembourg holding Saal and Flint Group, Midco Ltd. The total bank loans are valued at over $43 million, with a cost of over $46 million. Corporate debt is the largest category here at 49.1%. This is where a lot of the fund's investments are concentrated. We see exposure across many countries, including Angola, Argentina, Belgium, and Brazil. Argentina has 0.5% exposure with Petrobras, Global Finance BV, and Samarco Minerafal, SAF. Canada has 1.1% in corporate debt, including holdings in 1,011,778 BC Olse and Bausch Health Companies Inc. Germany has 2% with investments in Bayer AG and Grand City Properties ASE. Finland has a small holding in Mehiläinen Yhtiöt Oy. The total corporate debt is valued at over $72 million, with a cost of over $72 million. This fund is heavily focused on corporate credit. They also hold non-US government agency obligations, including clause or collateralized loan obligations, in places like the Cayman Islands and Ireland. These are complex instruments that pool loans. Ireland is a big component of these clause, with significant positions in Ares European Clo, the 8th DAC, and Bain Capital Euroclo DAC. These are valued at over $11 million, with a cost of over $13 million. In total, this fund has investments valued at over $145 million, with a cost of over $154 million. Looking at the statements of assets and liabilities as of the 31st of March 2026, the different funds show their net assets. The limited term municipal fund has $61.5 million in net assets. The municipal fund has $63.3 million. The Municipal Credit Opportunities Fund has $56.2 million. The Barings Global Floating Rate Fund boasts $109.1 million, and the Unconstrained Income Fund is the largest at $140.9 million. The net assets for the Limited Term Municipal Fund increased from $54.3 million to $61.5 million. The Municipal Fund also saw growth, going from $50.7 million to $63.3 million. The Barings Global Floating Rate Fund saw a significant decrease in net assets from $128.8 million to $109.1 million. Similarly, the Unconstrained Income Fund decreased from $145.2 million to $140.9 million. This indicates a shift in investor sentiment or fund performance dynamics among these funds. The statements of operations reveal how the funds performed over the 6 months ending the 31st of March 2026 for the MML Clinton Limited Term Municipal Fund. Net investment income was $812,000. The municipal fund had $983,000 in net investment income. The Municipal Credit Opportunities Fund also reported positive net investment income at $961,000. Importantly, for the Barings Global Floating Rate Fund, they reported a net investment loss of over $4 million this period, and the Unconstrained Income Fund had a net investment loss of over $6.8 million. This highlights the different income generating potential and risk profiles of these funds. The financial highlights provide per S-Hair data and key ratios for each fund class iShares. For the Limited Term Municipal Fund ended at $9.90. Per S-Hair, the Municipal Fund class iShares were at $9.74. Per S-Hair showing slight variations, the Barings Global Floating Rate Fund class, iShares are valued at $8.28, while the Unconstrained Income Fund class iShares are at $7.46. These lower values on the Barings funds reflect a combination of their investment strategy and potentially higher costs. The notes to the financial statements give us deeper insights. For example, Note 2 outlines significant accounting policies, including how investments are valued level 1. Investments are quoted in active markets. Level 2 uses observable market data, and level 3 relies on unobservable inputs, meaning more judgment is involved than municipal funds are predominantly. Level 2, while the Barings funds have substantial level 3, holdings particularly in bank loans and corporate debt, indicating more complex valuation. The Barings funds also use derivatives like forward contracts to manage risk for foreign exchange. And interest rate exposure, the Global Floating Rate Fund had net unrealized appreciation on its forward contracts, while the Unconstrained Income Fund had a net unrealized appreciation, these derivatives can add complexity and potential volatility to the funds. So what does all this mean for investors? The municipal funds are focused on stable, tax-exempt income with a heavy emphasis on specific states like Texas and New York if you are looking for tax advantages. These are clear contenders. The Barings funds, on the other hand, are playing in a riskier credit market dominated by bank loans. And corporate debt, they offer potentially higher yields but come with greater complexity and valuation challenges, like the significant level 3 holdings. You can see the difference in cost too, with the municipal funds generally being cheaper than the higher yielding credit funds for the Barings funds. The higher expense ratios on certain share classes like Class C can really eat into your returns over time. The Barings Global Floating Rate Fund and Unconstrained Income Fund also saw a decrease in net assets. SUG. JAJ. Either investor outflows or performance challenges. In the recent period, the municipal funds appear more stable in their growth trajectory compared to these credit-focused funds. The risk I am watching closely is the concentration in specific states for the municipal funds and the reliance on level 3 assets for the Barings funds. These can introduce cons and traded risks that might not be obvious at first glance. And the research tools I actually use are linked in the description. They help keep this channel going. That is my take stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.